Hi and welcome back to the channel Retail Investing and Trading. In today's video we will go over the rules of engagement into the Cypher pattern, so stay tuned. And we are back. Okay, as I said, today we will cover the Cypher pattern, and as I said before in two of my other harmonic pattern videos, which is bat and Gartley pattern, I'm doing this because I've seen a lot of people teaching it completely wrong. And as I'm one of the members of the company called Tier 1 Trading, from the coaches Akil Stokes and Jason Greystone, there is also one of the founders from that company, Darren, who actually found this cipher pattern. Okay, it's when he was doing the backtesting for some other patterns, he also recognized this pattern and then did the backtesting for it. He found out that the cipher pattern is one of the most profitable ones, and on some pairs it produces over 70% win rate. So a lot of people tend to trade it, even though in many cases cipher pattern does not give you the one-to-one risk to reward ratio when you are if you were to trade it based on the conventional rules that I'm going to show you in this video. So as before, if we go to the rules, I have them in front of me right there. And again, we will go through identifying the X point, the impulse lag, BC lag, CD lag, what are the rules for the completion point, what are the targets, and then we will go back to the charts and show you one real life example of euro dollar cipher pattern, which actually happened, I believe, 2 or 3 days ago of me recording this video. There is also one very interesting thing in this pattern because the another pattern also completed, and if you were to trade both of them, you would end up being profitable on both patterns. And I will show you exactly that example. So without further ado, let's go to the black charts. Okay, first we need to go here so that I can show you the rules and how everything moves. Before I do that, I gotta invite you to click that like button, click that subscribe button, and smash that bell button. Okay, so let's start now. So for the first thing, we need to identify the X point as always. So we'll put the X point right there and call it the X point. Now we will move the price and say that the price is moving from our X point to the A point. And as always, you need to backtest identifying the X point and finding your X to A move so that you can get the valid X to A leg. And now the thing is, for the B leg, the actual rules kind of start, and from identifying the X to A point, everything else should be rule based. Okay, there shouldn't be any more discretion. However, there could be some kind of differences because some people, for example, for A to B leg, let's say like this, A to B is like this. Okay, so some people say that they need to have at least two candles from A to B point for this leg to be valid. Some people, including me, I need a minimum of three candles from the highest point here to the lowest point here. Okay, and then some of those candles needs to have a lower low lower close for me to this retracement to be valid so that I can have my valid B point and my valid A to B leg. Okay, but in, this is something that you'll have to backtest and find, see for yourself. But the conventional rules for the pattern say that say that price at least needs to touch 38.2 and should not close uh, beyond the 61.8 retracement from X to A. So I gotta add this fib level here. Okay, so if we trade here, okay, even if we touch 61.8 and 78.6, we are okay. But we should not, the candle shouldn't close below the 61.8. Okay, so what does that mean? We can actually have a candle that would look like this. I'll put it in I don't know, maybe a red candle, bearish candle, and that same candle can have a Sorry. I'm gonna use a trend line, a wick like this, and it would be valid. It would be valid candle, okay? Because the candle didn't close. Obviously, it opened here and didn't close below 61.8, okay? But if the candle turns out to be that it closed below 61.8 here, then we wouldn't have a valid cipher pattern, okay? So let's remove the candle. I hope you understand the example, and let's start moving forward. In this example, we will use that we traded, we touched the 38.2, we closed somewhere here, and then we will go from there, okay? So let's mark our B point right here. And we have a valid B point. Now, other patterns are saying that their C point needs to be should not be above the A point. But in Cypher pattern, it's this thing. We need to cross above the A point or below, depends on the type of a pattern, whether it's bullish or bearish. But in this case, it's a bullish, and in bearish, it will be obviously below the A point, okay? In the example, we will show you I will show you the bearish pattern, so you will see on charts how it actually looks like. So here the rules say that we need to touch the extension, fib extension of 1.272, okay, but should not close above the extension 1.414. Now I have fib retracement here, but this is a cool little trick that I'm showing you right there. So I added a minus 27.2, which is actually the same thing if I were to use the fib expansion. Check it out. Okay, you see this? So it actually aligns. If I were to adjust this, they would align perfectly. You see? So we need to be in between 120. We need to test. The price needs to test 127.20 and should not close above 1.4. This is 1.4. I gotta adjust it. There we go. Should not close above this. Okay, again, it can wick up, but should not close above this level. So for this example, let's say that we traded here, and then we have a valid we have our valid C leg. Okay, now let's mark this C leg. Now we are looking for the D completion price point. D completion price point comes at the 78.6 retracement from X to C. Okay, but there is one other condition that we need to meet, that the price net needs to meet before we can say that we have a valid completion point. Okay, so we have the example of 78.6 comes exactly at this price point, 1.15389. Okay, this is the price point, and this is where we would be engaged in this cipher pattern. Okay, the 78.6 level, the decompletion point, needs to be at least at the price point of B or beyond that point. So if the decompletion point in some example would come to above the B point, the cipher pattern would not be valid. And those cases can happen when you have a huge wick, above the 1414. Then you gotta drag the fib retracement all the way to the top of that wick, and then the C point, then the decompletion, as you can see, can come above the B point. Okay, but in this case we do not have this example, so we will just mark the decompletion point at this level right there and drag the line all the way to here, mark it as a decompletion point, and now we have our cipher pattern. I did sorry. Okay, I will do this. Okay, now we have our cipher pattern, and I need to mark it with triangles. Okay, it's also the same thing. I will use triangles here. There we go. Colors, let's take this color and let's adjust it. Okay, and let's take another one. From this point on, everything else is basically the same as for the bat and Gartley. We set our targets and we set our stop losses. Again, for the stop loss, some people tend to, put ATR based stop below the X point. Some people do some kind of extensions from C to X. Some people do extensions from A to X. It all depends on your preferences and on the way how you backtested it. Targets, however, are the same as they are with the bat pattern and the Gartley pattern, and they are 38 level. A 38.2 fib level is first target, and the second target is 61.8. So for marking this up, we used the rectangles, so we were gonna use them again. Okay, let's do another one. There we go. So we have those two rectangles, and we will put the something like this bearish rectangle, a red rectangle for the risk, but the risk level depends on you. Okay, now again, if the price starts trading against you, going past your completion point, past your order, you can trail your fibs and then increase the win percentage of this pattern, but not the risk to reward. Okay, and with that being said, guys, that's the example of a Cypher pattern. It's highly profitable pattern. There is a video that I will link at the end of this video for the strategy, for the Cypher pattern strategy on pair Aussie CAD, and I will show you how all of my backtesting results and how I was able to produce 69% win rate with my backtesting on that pair, this very same strategy. Also, I mentioned a few times in this video that it's same as to Bat and Gartley, so you will also have a link to either of those videos at the end of this video. Okay, with that being said, I also invite you one more time to click that like button, click that subscribe button, and smash that bell button so that you can help the almighty YouTube algorithm to rank our video even more higher than it is already, and to help as many people possible. Now let's go down to the charts and let me show you the real life example on euro dollar for the Cypher pattern. Okay, so here we are, and in front of me I have the euro dollar chart on 1 hour 1 time frame. And as I said in the video, the thing is that we recently had a Cypher pattern which completed right here, 23rd of January 2019. Then it rallied down, found some kind of a support right here, and then rallied up. Okay, so for let's find this Cypher pattern. Let's see what were the rules, how did it close, etc. Okay, what were our targets, and how much money would we make on this trade if we were to trade it live. So we identify this here as our starting X point. Okay, so X to A leg was this leg right here, and then we had some kind of a retracement. Okay, there are more than 3 candles, as I said, and we have a higher high higher close candles. In this example, this is one, this is another one, this is another one, another one, etc. Okay, so what we need to do here is move our fib levels from X to A point. Okay, so this is okay. I will change the colors again a little bit just for you to see better. Okay, there we are. So this is X, this is A point. We have our X to A, and we see that the price retraced back to the 61.8 level, but it didn't close beyond that level. Okay, you can see this. It didn't close above the 61.8, which makes it a valid B point. Okay, so this is X to A. Actually, I will not draw this. Okay, I will draw the triangle. Let's go. X to A right there, and we have A to B point. Now we are looking for the extension. Where did the price end up going? So as you can see here, price made move lower, retraced a little bit, broke below this below this wick and gave us a new lower low, which actually tested the fib extension 1.272. But I have this a little trick here, but I will also, for the purpose of this video, I will pull the extension levels out where they are here. So we have them from here to this right there. Okay, and now I will again use my fibs just for you guys to see that. Oh, sorry, just for you to see that basically this is the same thing. You see how they align? This is the same thing. So cool little trick so that you don't need to use both tools in any basically in any trading platform that you're using. There are always separate tools because the expansion, fib expansion and fib retracement is two different things. Okay, so you just use this little trick. Double check, did you put your fib levels correctly, do they match, and then you can remove the fib extensions if you like, of course. As you can see here, the price tested the 127 level, 127.2, and here it didn't close above or beyond, actually here below 41.4 level, 1.414 level. Okay, so that gives us our valid C point. Now we have to find the completion point, and we have a good example how close. Let's find the completion point actually comes at what price point? 78.6 retracement from X to C. Okay, so we have our this one here, 78.6 from X to C, which is this right there. You can see it came here. But you can see here how the real life example of a pattern is, it almost came below the level of the B point, which it shouldn't. You see, X to A, A to B, B to C, C to D, and if this price came below, but it touched the 78.6, it wouldn't be a valid pattern because one of the rules says that the completion point has to at least be at the same price level as the B point or beyond that level. So we would set our targets here. We would put our pending orders and we would set our targets. So let's draw this right there. Okay, so our trade would look like this. Entry point, target 1. Let's use this color. And then we have target 2 is 61.8. Let's see, use this color. Okay, and we would actually make some decent money. We would make what? 22 pips plus 36 pips. It's almost 60 pips in one single trade that we would make on this Cypher pattern on euro dollar. But I also said, guys, that if you're not trading ciphers, if you still didn't have a chance or didn't have a time to backtest it, this is a good example how more than one pattern can present themselves and can fit both type of traders. For example, I still didn't backtest the ciphers on euro dollar. It's on my to-do list and I'm probably gonna do it by the end of the next month. Okay, but here is also another pattern. If you find this here, this here valid X point, some of the traders, I'm sure they do, because then we have X to 8 here, we have A to B here, B to C here, and then C to D completion point. And the price actually, in this kind of a pattern, which I will show you right now, went against us a little bit. So we had to trail our targets, but both of the targets got hit. Let me show you. So we have our X to A. This is a short little lesson on Gartley. Okay, so what are the rules for Gartleys? We need to touch 61.8. This is a different pattern, guys, than the Cypher pattern. A link to this pattern will be at the end of this video. Okay, we need to touch the 68. We did. What else do we need to do? Let's see this. We again need to touch the 61.8, which we did here. Okay, so X to A, A to B, B to C, and then CD completion. I'm going through the rules really quickly because I just want to show you the example. I don't want to teach you rules here because the rules are covered in a different video. Okay, so I'll just quickly go through this pattern. I'm gonna adjust this. Just give me a sec. What are the rules for the engagement? 88.6. I need to add this is 88.6. Where is it? Okay, to the pip. So yeah, that would be our entry level for this pattern. And then the price moved against us a little bit. It didn't close above this, and then it dropped down and hit both of our targets, which would again be retracement in case of this pattern from this point to this. Our initial target would be here, 38.2. A second target would be here, but we would trail it a little bit and we would end up making what? C2 again. 13 pips plus 27, 50 pips if you were to trade the Gartley pattern if you still didn't backtest the Cypher pattern. With that being said, click that like button, click that subscribe button, and smash that bell button. Thank you very much for staying till the end of this video, and talk to you soon. Bye bye.